Hello and welcome to the Enterprise Finance webinar, a smart guide to bridging finance. My name is Paul Huxter, Head of Sales for Enterprise. Due to the number of participants today, we will not be able to answer questions during the session, but at the end of the webinar, you will see an email address you can forward questions to for us to provide an answer. The session should take no longer than 20 minutes, so let's begin. Enterprise Finance is the leading provider of second charges and bridging finance in the intermediary market. Established in 2002 and 100% committed to the intermediary market. We operate on a referral basis in 5 specialist lending markets: second charge mortgages, bridging finance, development finance, complex buy-to-lets, and commercial mortgages. Today's webinar focuses on bridging finance and is the second in a set of 3 webinars looking at each of our major product areas. What this webinar is intended to do is lift the lid on placing bridging finance for clients and give you, as a mortgage broker, insight and tips on how to execute the bridging loan process as simply and as effectively as possible. Using master brokers like Enterprise gives access to a full range of specialist bridging finance lenders, many of whom work exclusively with master brokers. Further, as we complete hundreds of bridging loans every year, we have the expertise and relationships to navigate the nuances and complexities of the bridging world within the short timescales often surrounding a bridging deal. We will therefore look in depth at the process of placing a bridging loan, assuming a master broker is involved. We won't be looking at the situations that can make bridging finance appropriate over other capital raising options. That's covered in our 8-minute broker introduction to bridging finance video that hopefully you have already had a chance to watch. If not, it can be found at enterprisefinance.co.uk/video, along with introductions to second charge and complex buy-to-let mortgages. However, from your feedback when you signed up for this webinar, we know that a number of you are keen to understand better when and why a bridging loan can really help clients. So we will briefly introduce the principal occasions. In summary, these are broken property chains. The classic reason for a bridge, when your client's buyer pulls out but they need to complete their new purchase or lose their deposit. Downsizing. Helping homeowners manage the process of buying a less valuable, smaller property immediately, giving them ample time to sell their current home for full market value. Buying unmortgageable property. Where there's no kitchen or bathroom, conventional mortgages aren't available, but a bridge can help your client buy and conduct value-adding works to bring it up to standard. Renovations and conversions. Small-scale development work that can add significant value to a property for your property professional clients, but which are often smaller than conventional development financiers are interested in. Lease extensions. On short leases where conventional mortgages aren't available to fund Section 21 notices, a bridge can cover that period while the value is added to the property. Planning permission. In the same way, a bridge can cover the value-adding process of obtaining planning permission. Auction buying. Any occasion where time is of the essence, like the 28-day completion window of an auction, bridging finance has the speed to get the deal done in time. Again, these are explored in more depth in our accompanying video, so do take a look there as well. Anyway, back to the main presentation. As we walk through the process, we will give you smart pointers that can avoid pain points in the process in order to achieve that goal. This is all based around 2 principles that are common to many processes in different industries. Getting things right first time and avoiding rework simply saves the time, energy and hassle of going back and forth to fix it. Given the often time-sensitive nature of many bridging deals, this can be critical for great client outcomes. Likewise, avoiding surprises maximises the chances of completing a case because the client keeps faith in the process and the lender has more confidence that the client is a good risk. So there should be 3 clear gains to be had from this: less hassle for the client, an easier process for you, and faster completions. First, it's important to clarify the role of advice in bridging. In essence, there are 2 types of bridging finance available in the market: regulated and unregulated bridging. The difference between the 2 is simple. Regulated bridging is secured against what is or what will be the client's main residence. Unregulated bridging is secured against any other form of property, such as commercial or buy-to-let premises. From the broker's perspective, a regulated bridge is a fully advised and regulated sale sitting under the same MCOB rules as a standard first charge mortgage. This means that the process of advising on a regulated bridge is the same as a first charge, just conducted under much shorter timescales. Regulated bridges are also limited to a maximum 12-month term. Interest must be rolled in and fee structures are regulated too. If the bridging deal is regulated, it will be down to the broker to determine whether a regulated bridge is the best available route for the client, and Enterprise can assist you by providing the necessary information to ensure the correct product is selected for the client's needs. However, as around 85% of bridging finance deals in the market are unregulated, we will be focusing on this process in today's webinar. So let's look at the first stage in the process. A client comes to you looking to raise property finance. Through your regular fact-find work, evaluating potential mortgage financing options, you realise a situation may be best served through a bridging loan. Again, you can refer to our introductory video to explore some of those situations. At this point, you're going to refer to Enterprise as a master broker, who will review the bridging finance options available and hopefully place the case with a bridging finance lender. To do that, you could simply send us the client's name and number to make the referral, or you can enter their details on our Apex broker portal found here. You would then let the client know to expect a call from us. We would take the process forward from there with the client, and you would receive regular updates through the process up to completion. However, with just a little additional input up front, you can prepare the client for the process that will follow. In a smart way, that will dramatically increase the chances of a right first time and above all, quick process for everyone. This key additional input helps avoid pain points later in the process, which we will highlight during the rest of the presentation. Specifically, listing them in the order that they can impact the process rather than any order of priority. Establish what the client's exit route for repaying the interest-only bridging loan will be at point of inquiry. Having a valid exit strategy is critical to Enterprise being able to successfully consider and then place the deal. Often, this will involve refinance of the bridging loan to a traditional mortgage lender, which you, as the introducing broker, will be responsible for. Explain the importance of transparency and accuracy of information the client gives during the process, especially their exit strategy. Making sure the information clients supply is correct and will match any supporting evidence avoids later queries during underwriting. Set client expectations around not only about interest rates being higher as it's bridging finance, but fees and charges they might expect to see. This really helps the client have no surprises about likely total costs and avoids them going back to you once the process has started to query the initial referral. Set client expectations for documentation typically needed. If clients are aware beforehand, it gives them more time to have the right things to hand, such as proof of residency dated in the last 3 months. Explain the importance of completeness of documentation. Omitting such simple fields as a home phone number or not including standard items like proof of ID can cause delays as the process goes back and forth. And again, avoid surprises for the lender down the line. Last, but by no means least, the client will need their own legal representation. Ideally, experienced in undertaking bridging finance deals rather than only doing regular conveyancing. That's a high-level overview of the key tips for a smooth process. Most of this can be done as part of your referral conversation, and 15 minutes discussing this at that stage can hugely impact the process. Let's see how and where. At this point, we will work directly with your client to take them through the process for identifying the best bridging finance product on the market. You will of course be kept in the loop and can choose to be as involved as you like. That means that, day to day, we are working more closely with the client. Once the case is assigned to a bridging underwriter, the first step they'll take is call or email you just to confirm the case basics. From this information, the underwriter will review whether the client's circumstances are, in principle, suitable for bridging finance and prepare indicative terms for the client. These will be sent to the client who can confirm that they're happy to go ahead with the full process. We will then send out a list of paperwork to the client to meet the requirements of underwriting the deal. We will share this with you for your information in the same way we would share indicative terms earlier in the process, in case the client chooses to discuss them with you. In this initial phase, there is a major potential stumbling block where our hints and tips can help. The exit route is key to underwriting a bridging deal and therefore to the chances of an applicant being successful. It is then scrutinised closely at the initial suitability stage, so needs to be acceptable. But what is an exit and what are the acceptable routes for bridging finance? We know that bridging is a short-term, interest-only loan. That means it has to be paid back by the end of the term, which could be only a few months away. That's regardless of whether it was taken out on a first charge basis or as a second charge. Either way, it will have been secured against property or in some instances land, and over a period typically not exceeding 12 months. At the end of the contracted term, the bridge needs to be exited. This is the exit route and can take one of three forms. Sale of the secured property, a simple and easy exit route where the proceeds of the sale will be used to settle the bridge. Refinancing to a conventional mortgage or buy-to-let, something you as the broker will be asked to provide evidence of, such as a lender decision in principle or lender criteria that would fit the client's circumstances at the end of the bridge. Or cash redemption from another source, leaving the secured property unencumbered. Examples would include the sale of a share portfolio that can be evidenced, or cashing in a pension lump sum within the 12-month contracted period. This redemption event is known as the exit strategy. Being transparent about not only the exit route, but also further aspects of their situation, whether income and credit or the property details, helps establish the client's credibility with lenders. If later evidence calls parts of their application into question, this can derail the process significantly. This is particularly true regarding their intentions to exit the loan. Bridging finance can be used for a wide variety of purposes, can be secured on an equally wide range of property types, and can be made available for clients in a range of circumstances. There is therefore no need for them to be anything other than transparent in their declarations. This is also the stage where clients will see their first estimates of likely costs. If you've managed client expectations on fees and charges up front, a big stumbling block can be avoided. Clients can be surprised at this stage by the combination of interest and fees and either stop the process or go back to you to discuss options again and question your initial advice. If you explain the following to them at the point of referral, this can often be avoided. First, interest rates will be at a premium to regular high street options. This is for two reasons. Number one, a bridge is very flexible with much simpler underwriting and no exit penalties, meaning you can leave it quickly and easily with few exit costs. The higher interest rates during the loan reflect that additional flexibility. Number two, the lender is taking a significantly higher risk with a bridging deal than a conventional mortgage, particularly as they often are lending against a property that is in a state of disrepair which other mortgage lenders wouldn't lend against. Second, there will also be fees for arranging the bridging finance mortgage. In addition to the interest rate, which covers the master broker services, it's also worth bearing in mind that, for property professional clients, bridging finance is simply another method of funding a project. In the case of bridging, its flexibility can allow projects to go ahead at an expected profit margin, which would otherwise not be able to be done. For example, when there is a tight time frame. The cost of arrangement and interest are therefore balanced against the opportunity cost of not doing the project at all. With the return of the completed paperwork, the case is reviewed by our expert bridging underwriter. They will begin packaging the case by reviewing the documentation, double-checking the application form for completeness and for consistency with the supporting documentation. We will then request third-party involvement. This includes commissioning a valuation, which the client will be required to pay for, lender consent if the bridging has been arranged on a second charge basis, and any references required. This is a full property valuation, which can take up to a week to come back. If the finance need is urgent, we can arrange for the valuation to be undertaken and returned within 48 hours. The second part is obtaining lender consent. Specifically, this is consent from the first charge lender to allow a second charge to be registered against the property. This typically takes 5 to 7 days to get, but again, we can expedite this if the finance is required urgently. You may not be aware, but a few first charge lenders don't grant consent. However, our initial conversation with you when you make the referral to check the basics of the case should identify situations where the client has one of these first charge lenders. Again, there are some potential roadblocks during packaging. All documentation needs to be fully completed to avoid any unnecessary delays and back and forth with the client. Fully completed documentation will also be viewed by the lender as an advantage to getting the deal completed quickly. Briefing the client up front about what will be needed can help them prepare in advance, which typically cuts down the time this step takes. Here are the key documents normally asked for by bridging lenders. As you can see, the information required for a bridging deal is no different to that of a normal first charge mortgage. If the client is servicing the loan or using refinance as an exit route, income details will be required to ensure the client has sufficient income to make the monthly payments and also has the necessary income to meet the refinance requirements. If sale of property is the exit route, some details around the marketability and sales potential in the market may be sought. The underwriting of a bridging deal is very straightforward, and we can liaise with the client on your behalf to gather this information. However, if you have already collected these documents in your dealings with the client, supplying them to us will help speed up the process. Finally, if you have briefed the client at inquiry stage about the fees they will be liable for, the valuation fee that now becomes payable by the client will not come as a surprise and will have been factored in, so the client has the funds immediately available. Once the application and documentation is complete and our underwriter has completed their checks, we are now ready to involve the bridging lender formally. We will submit the case, normally on the lender's system, and provide the supporting documentation so that the lender can underwrite the loan. At this stage, the lender may require additional supporting information. For example, if the case has something unusual, such as raising a bridging finance loan charged against equity in multiple properties, they may ask for supporting information beyond the standard checklist that would normally be sufficient. We would then liaise with the client to assemble that additional documentation to complete the lender's requirements. Transparency and completeness are key here, so there is no danger of the lender finding mismatches between application and documentation, which would lead to rework. Both cases can be avoided by ensuring the case is properly packaged. That's why we spend a lot of time during the packaging phase getting the pack complete, accurate and consistent before submission. And ultimately, that's one of the key advantages of a master broker. The final stage to completion is normally the smoothest and most straightforward part if our hints and tips have been taken, particularly the need to inform the client about their own legal representation in the transaction. To start, the lender issues an offer for the client to sign whilst also sending out the full legal pack to the client's nominated legal representative. The client checks the offer details with their legal representative to ensure everything is satisfactory, and the legal representative ensures the client is aware of all pertinent factors around the deal. The client then signs and returns the offer to Enterprise, who will check and forward to the lender. This is the part of the process where many deals fall down. Legal representation on a bridging deal is one of the major causes of deals either not completing or not completing within the required timescales of the client. Often clients hire a conveyancing solicitor who is experienced in conventional mortgages but not in bridging finance. This causes two major problems. Number one, they will expect to operate to timescales appropriate for a regular mortgage, where weeks can be acceptable. Bridging often needs legal work complete in days and sometimes in a matter of hours. And number two, for bridging, unlike regular mortgages, clients must get independent legal guidance to make clear that they understand the bridging loan that they are taking out. Conveyancing solicitors unfamiliar with this requirement can drop out of the process at this stage, as they are unwilling to take that responsibility. It is therefore vital that the client is informed at inquiry stage to instruct a solicitor that has experience of dealing with short-term finance and understands the need for urgency and speed in responding to requests from the lender. By hiring the correct legal representative, this will be a relatively quick and painless process. If the client wants Enterprise to assist, we have a panel of solicitors that operate in this market that we can recommend. The solicitor will then complete the lender and client's requirements, such as title searches and loan inquiries against the subject property. They will also witness the signing of legal documents face to face with the client and deal with any undertaking and redemption figures relating to the removal of any existing charges against the property and ensuring necessary insurances are in place. The solicitor returns necessary paperwork and confirms the deal is ready to complete. Once that's returned and received by the lender, the case completes. The hopefully happy client will then receive their loan funds in a transaction that has taken 5 to 10 working days from inquiry typically. With a well-prepared, motivated client and an experienced lawyer, this can be as little as 3 days from application, demonstrating the flexibility and power of bridging. At this stage, the lender will pay us. We will calculate and forward on the introducer fees that you will be due within 48 hours of being paid by the lender. Those fees will be according to our introducer agreement if you're directly authorised, or the agreement we have with your network if that's the case. We also pay the network their fees as appropriate. In summary, placing a bridging deal is a process that has both similarities and distinct differences from conventional first charge mortgage arrangements. However, working with a master broker means we do a lot of the heavy lifting with the client once you've done the upfront work and made the initial referral, including coordinating with third parties. After the referral, with the client driving the process with us, you can choose to be involved as much or as little as you'd like to be, though we'll keep you informed at key points along the way. However, to make that process as smooth and efficient as possible for the client, and to avoid you getting drawn into the process through queries and follow-ups, a little bit of client guidance at referral stage can oil the wheels. The process is typically between 2 and 4 weeks in total, but turnaround times as fast as 3 days from application can be achieved where the client is well prepared and in particular where their solicitor is experienced in working on bridging deals. Our 6 hints and tips will help set your client up for a right first time and no surprises process that reduces effort for everyone and increases the chances of a successful, speedy placement of their bridging loan, where time is often of the essence. That means better outcomes for the client with more efficiency for them, for us and for you. That completes our run through of the bridging finance placement process. We hope you found it interesting and helpful. If you'd like to view our introductory video on what bridging finance is and when it can be useful, go to enterprisefinance.co.uk/video. If you have any questions about what you've seen today, do send us an email at questions@enterprisefinance.co.uk and our BDM team will get back to you straight away. Or if you have a particular case you'd like to discuss, why not email sales@enterprisefinance.co.uk and we'd be happy to talk it through with you. It just remains for me to say thank you for taking the time to watch and listen to our webinar, and hopefully we'll see you next time. You're now free to close your browser and leave the webinar.